The Australian dream used to be a quarter-acre block and a hills hoist. But in 2025, that dream has changed. It's no longer about how much space you have, it's about how hard that space works for you. This year, we saw a specific search term on major property portals explode by 72%. Ladies and gentlemen, it wasn't luxury, it wasn't pool, and it sure as hell wasn't waterfront. That term was dual income. With interest rates the way they are right now and set for more rate hikes in 2026, buyers are terrified of mortgages they cannot service alone. They are desperately hunting for properties that pay for themselves, and this panic is your opportunity. In this video, I'm going to show you how to exploit this surge. We're going to break down the math on how manufacturing a dual income property can help you pay off your own home 10 years early. Welcome to PropSpotter. My name is Sean, and we are the smarter way home. We help you find your dream property and get you into the market sooner so you don't sit around twiddling your thumbs. Let's dig into this data because it tells us exactly where the market is bleeding. For the last decade, the most popular search terms on major real estate portals like Real Estate and Domain were lifestyle-based. We wanted pools, decks, en-suites, but that 72% search trend for terms like dual occupancy, granny flat, proves a massive psychological shift. People aren't searching for luxury anymore. They are searching for survival. Families need a place for aging parents who can't afford a retirement village. First home buyers need a tenant in the back just to get approved for the loan. Investors are realizing that a single rental income no longer covers the mortgage at a 6% interest, which is slated to become even higher this year. Industry experts are calling this the Como effect. Compromise or miss out. Buyers are willing to sacrifice the big backyard or the triple garage if it means they get a second front door that generates income. This creates a massive supply-demand imbalance. There are thousands of buyers hunting for dual income properties, but very few exist on the market. That scarcity is where you, the smart investor, comes in. You don't buy the dual income property at a premium, you manufacture it by finding the right single asset property and then adding that granny flat either today or down the track. So how do we execute this? We stop looking for those perfect investments and start looking for convertible ones. We are looking for that ugly duckling on a decent block that has side access. Let's talk real numbers. Construction costs have increased significantly post the pandemic, but they've stabilized over the last 2 years and are still high. To build a high quality 60 square meter 2-bedroom granny flat in a major capital city, you are looking at anywhere between $160,000 to $200,000 for a turnkey build. This is made up of approvals that are $5,000, site prep that is $10,000, a build that is $150,000, and a contingency that's roughly $10,000. I probably haven't captured all the costs, but that at a high level is where you should be. That sounds like a lot of cash, but you have to look at the return on investment. In major markets like Sydney, Melbourne, Brisbane, Adelaide, or even Hobart, a brand new 2-bedroom granny flat will get you anywhere between $450 to $650 a week in rent. Let's be conservative and call that $500 a week, which equates to $26,000 a year in additional income. That roughly $180,000 cost divided by $26,000 of rent is a 14.4% gross yield. You are manufacturing an asset that yields over 14% in a market where a standard house yields between 3 to 4 or even 5%. That, ladies and gentlemen, is a financial superpower. You are literally printing money in your backyard. Now, let's deliver on the promise in the title. How does this pay off your mortgage in 10 years? Let's say you have a $800,000 mortgage on your principal place of residence. At a 6% interest rate, your repayment is roughly $4,800 a month. Over 30 years, you will pay $920,000 in interest alone. It's sickening. Now imagine you build that granny flat. You take the $2,000 per month in net rental income after costs and taxes, and you throw it directly into your home mortgage as an extra repayment. By adding $2,000 a month into your mortgage, you don't just pay it off a little faster. You destroy the interest compounding. You could slash your home loan from 30 years down to 12 or 15 years simply by making that change. And you save hundreds of thousands of dollars in interest payments to the bank. That, ladies and gentlemen, is why the search volume for dual income properties is up 72% last year. People aren't just looking for extra pocket money, they're looking for a way to escape the debt trap. The dual income surge isn't a fad for most of Australia. It's a structural change in how we view property. As land values go up, we simply cannot afford to have empty backyards anymore. Whether you're an investor looking to cash flow in a negative geared portfolio or a homeowner trying to become debt-free, the answer is in the density. Don't wait for the dual income properties to come on the market, because if they do, everybody else is fighting for them. Go out, take the time, and build one. If you're wondering if your property or a property you're looking at is actually eligible for a dual occupancy or granny flat, comment down below and I'll help point you in the right direction to find out how to get a granny on your property. Thanks for watching, and I'll see you in the next video.